All right, we're going to do our stock market look, and we're going to look at the Nasdaq 1 to 3 week view. And I'm giving you a warning in here that there are breakdowns. Last week, we talked about that there were some deteriorating conditions in here, and that it was looking like there would be a potential breakdown. We gave you the reevaluation levels, we gave you the breakdown levels, all of those things, and they all broke. For the S&P 500 and the Nasdaq, despite the fact that there's a rebound here on Friday that we don't even know is going to be able to hold up, because we saw big selling come in on Thursday in the final hour. And of course, final hour selling is very different than we've seen over this last year and a half. So the tone has changed, the market has changed, and very significant things are happening right now that aren't good. Let's take a look here. This is the QQQ. This is what we're going to do our analysis on for this week, the Nasdaq, looking at this ETF. So this is just nothing on here, right? We do have our the volume on the bottom, and we have the slim ribbon PO and the slim ribbon on the top. What I'm going to show you right now is that the slim ribbon right over here is one of the best momentum indicators you will ever see. When it is green, and this is green on the bottom in the slim ribbon PO, it's positive. When you get these up arrows, it shows you resumptions of positive conditions. Sometimes when you correct, it will turn neutral blue, but then it will turn green again, as you see, giving that signal right there. What happened was you got a little bit of a whipsaw here as the market turned neutral, and right in here it turned negative. This is where it turned negative right there, which was fair warning that the momentum conditions were getting bad. And here you could see right here, it continued to warn of resumptions, and the widening of the slim ribbon is a sign of momentum in that direction increasing, just as it did right over here in a positive way. And all positive, it's now doing it that way, negative and all negative right there. And now what I'm going to do is bring in the analysis, the cycle analysis, and now all of a sudden this chart lights up with information that I'm going to show you about. So we have cycle analysis in here. These are the cycle brackets. This is a drawing tool that shows you the rhythm in the market. This is money flow. This is a visual way to see money flow. When cycles are configured bullishly, and you can see we have these green arrows in here showing you, that's when each of the highs is higher and each of the lows is lower in the cycle. And you have this upward directional component, which is essentially positive money flows, positive momentum going through this period. Once the decline comes down and starts to test the previous low, even though this is positive, you get a warning. Now, I want you to note that this good positive structure, followed by a structure that was losing strength, followed by the structure that topped very early in this cycle, giving you what we call left-hand translation, that's actually what forms head and shoulders tops. Head and shoulders tops and bottoms are formed by cycle rhythms, and you see that in here. You can learn that in our cycle analysis workshop at askSlim.com, which we have a special starting next week. So you can see in here, this is where it turned negative. Now, this is really what is key right now. And I'm going to get a little closer look as we look at these cycles that are coming up right in here. Let me just zoom this in a little bit more for you to see. So here is where that cycle peaked and turned down and broke the previous low. It also broke that neckline, you can see. So now what we have is cycle configuration that is negative. And the directional component shown in here by this channel is now pointing to the downside. That keeps all rallies from getting through resistance levels and will keep pressure on the market. So these cycle rhythms, which are now averaging about 20 days between each low, tell us that this decline that we're in is going to come till mid-October, around somewhere between the maybe 11th and 15th of October. And we have a target zone that is formulated off of the fib extensions that come off of this last cycle, which says it's likely to hit 355 on the QQQ, down to potentially 350 in this cycle. So that says all of the rally attempts in here are likely to fail and to keep coming down. And because of the negative configuration right in here, it is likely that the next cycle will rally and fail in a resistance zone that will develop in here and then go to lower lows. We are projecting that down to that intermediate 23.6% fib extension as this negative directional component moves the market to the downside, and that comes in right around 330 on the downside in the QQQ. So this is our 3-week, basically 1 to 3 week projection, almost 4 weeks, that the market will flounder right in here, try to rally and keep failing, maybe get a better rally in here, and then move down again with this low here projected out to around November 10th. Plus or minus right in here. These breakdowns are very significant when you get these, and you get these translations that peak early, which tell you major selling is in the market, and when you get these breakdowns, which show you that the overall configuration of the market is negative. So that's, a look at the Nasdaq. It is clearly negative when you look at this with a lot of risk. I want to show you 4 key stocks that are in this tech category that have very similar things going on. Let's look at NVDA. NVDA, which of course was a stock that did super well based on their cryptocurrency, the cryptocurrency markets, and their chips. Here you could see the cycle analysis in here. It's gone from neutral to positive for a long period of time. Momentum now turns negative, and the breakdown right over here, which points to a decline, yes, out into the middle of November, just like I showed you in the looking at the QQQ. So that's NVIDIA. Let's take a look at Facebook right here. Facebook, same thing. It is broken down right there. And you might get some rallies in here, but look at the negative momentum, first time in all of this time frame in here. And that giving you a condition that is suggestive that this will decline into the middle of November. You could see what we call the principle of synchronicity at work, where products are likely to bottom at similar times or at the same time. Take a look at Square right in here, which has done super well. This first low due, yes, middle of October, as you see right over there, and then the next low, middle of November. This has a breakdown, likely to be coming down to this area of fib extension around 230 or there in this next wave, in this next week and a half. That is a look at Square. And let's just take a look at Microsoft, which has a different pattern, but still negative, as we get this cycle right in here, which bottomed right at that point, and all of these positive conditions and all of these bullish signals that you see right in here for Microsoft. It now breaks that key low and momentum turning negative, as you could see right there. We're expecting a rally, but that rally to fail, and then when that rally fails, we'll have a resistance zone in just the next few days for our members, and then it is likely to be moving down again through that period right over there, and this low out over here towards the end of October. So it's a slightly different pattern for Microsoft, but still negative as it turns the corner here on the downside and momentum gets extremely negative. That is a great look at 4 very key stocks that are in this tech category, tech streaming, just a really bad condition. Let's go back to that QQQ really quickly for you to see it one more time. There is that analysis that is just screaming at you. Please do become an askSlim premium member so that you can learn so much about this. Look for our cycle analysis workshop special, which is coming next week. These are negative conditions and warnings. The probability of a declining market is very significant relative to this market saving itself and moving up sharply. That could always happen, but we sure doubt it. And I would say the risk rewards are 4 to 1 or greater on the downside based on everything that we see in here. Negative directional component, negative money flows, negative momentum, breakdowns, head and shoulders top, all of this really giving you a sense that there is trouble out there. For full analysis, seeing our weekly and daily on on the Nasdaq, the S&P 500, the Russell, the VIX, 22 other futures contracts. Please do watch Future Speak on Wednesday. If you become a PSP member, that's our popular services preview that we're running this week that I talked about earlier in the show. You must sign up for that at the top of the website. You'll be able to see Future Speak for this week at no cost to you, no credit card. So please do sign up for our PSP. That is a look at the QQQ at the short-term view, which is not pretty, as you can see when you look at that.